The rupee depreciated further against the dollar today. As per the data of the central bank, the selling price of the US dollar was recorded at 171 rupees and 42 cents.
At the start of the year, the US dollar sold at rupees 153 but has seen a meteoric rise of 17 rupees to be recorded at more than 171 rupees at present. While there has been a drastic decrease in the rupee in recent weeks, the central bank has had to resort to releasing foreign reserves to sustain the value of the rupee. The central bank last week revealed that they had taken steps to release a sum of rupees 184 million for this purpose. While the government has taken steps to release money in this manner, they also had to suspend the treasury bill issuances scheduled for yesterday. The government issued treasury bills to cover daily expenses, including government sector salaries and fuel costs. These are issued carrying timestamps of 3 months, 6 months and 1 year. The government prepared to raise 6,000 million rupees through the issuance of treasury bills yesterday. They intended to raise 2,000 million on the 3-month basis and another 4,000 million on a 1-year basis. However, as the interest rates of the bids presented exceeded the levels expected by the central bank, they decided not to raise the proposed 6,000 million. However, bids worth rupees 13,922 were received during this auction to raise 6,000 million. When the central bank last issued bonds, it was at an interest rate of 8.56% for 3 months and 9.051% for those carrying a validity of a year.
International perspective. Despite the unfavorable global economic situation, Vietnam's economy maintained its growth momentum and recorded significant achievements in the first 3 quarters of the year. It is notable that the quality of growth has improved and the growth model is shifting from extensive to intensive. According to the Department of National Economic Issues under the Ministry of Planning and Investment, with the socio-economic development figures in the first 9 months of the year, it is projected that all of the 12 criteria set by the National Assembly will be fulfilled, with 8 expected to exceed the targets, thereby helping to realize the 5-year socio-economic targets. The GDP growth for 2018 could reach 6.7% or even higher if more efforts are made in the final months of the year. Data from the General Statistics Office show that the Vietnamese economy grew by 6.98% in the January to September period, the highest growth rate in the past 8 years. The manufacturing sector continued to be a bright spot and the main driver of growth, expanding by 12.65% during the period. The services sector grew by 6.98%, which was lower than the previous year but higher than the average during the 2012 to 2016 period. Exports in the first 9 months of the year reached nearly $179 billion, up 15.4%, with 26 goods bringing in over $1 billion each. The notable feature of the economy in the last 9 months is that high growth was maintained and the quality of growth was improved. About a quarter of Vietnam's total trade is with China, which is facing potential tariffs on all of its exports to the US in an escalating trade war with President Donald Trump. But Vietnam is successfully facing the challenges by managing their financial policies, foreign exchange rates, interest rates and inflation by attracting small-scale projects which are deviating from China due to the US trade policy.
Now the government comes up and says we need exports. But when it comes to the exporters, you don't give them any encouragement, you don't give them any concessions, you don't actually give anything to them to develop the export sector. Yet the government comes and says if we are to come out of this, we need exports. So how does that work, the contradiction? Why can't the government look at a way to give something to the exporters and to actually develop exports rather than coming and saying we need exports?
The private sector people are capable of managing it, but at least if they can take off the regulatory barriers, for instance the customs procedures, at the shipping procedures, but if they can have an ease of situation on those aspects, that would be more helpful for exporters, rather than giving like a direct incentive that will also boost it.
Then Mr. Fernando, the taxes that they talk about, the government imposes a lot of taxes on exporters as well, because they seem to be thinking of it as an easy way to tax people. You know exports happen, so you tax them sort of. So when there are a lot of taxes, that too affects this.
Exactly. Taxing on exports is a massive problem. But on the other hand, we have to also remember taxing on imports is sort of indirect way of taxing exports. So both the sides has to be balanced. If you can take those off and have more sort of a direct tax system rather than having indirect taxes, that would be helpful for exports.